S&P 500 analysis August 21, 22. The S&P 500 bulls put in a lot of effort this past week and made good progress in line with our primary scenario, even though they didn't really start that well on Monday. So at the start of the week, the price slipped a few points, but our cuckolded friends didn't let that bother them and went back to work from midday, Central European time, of course. With an impulsive jump, they moved the price towards the pink-colored target zone between 43.05 and 43.75 points, which we intended as the target of wave V of the same color or the superordinate blue wave. On Tuesday evening, the S&P then moved a little further into the zone mentioned and thus fulfilled our requirements for the waves mentioned before it had to accept significant losses again in the following trading hours. In the following days, the price rose again a little before losing a few points again on Friday. While the price has absolutely met the requirements for the current move by hitting the pink target zone and the story could be over accordingly, for now we'll give it some time and space on the upside to catch the wave in blue to expand a little further north if necessary. Once it completes that, we see the index start a countermove that should take it back below the 42.02 point mark and into the lower blue target zone between 40.96 and 39.53 points. Within this, the S&P should then complete the associated wave in blue before the upside should continue. The start of the blue zone mentioned can also be understood as an endurance test for our primary scenario. For example, if the mass index does not succeed in initiating the bullish trend reversal in this area and it also slips significantly below the 39.50 points in the process, this would be our alternative to activate the bottom. This envisages that the bottom of the correction had not yet been expanded on June 17 and that the price should therefore undergo another significant setback. This should take it below the previous low at 36.39 points and into the turquoise target zone between 35.97 and 33.53 points where the alternative wave alt point 2 can be expected to complete. As a result, we see the price resume its upward movement in this scenario as well. The daily chart provides a good indication of where the S&P 500 should be headed in the medium and long term, both in the primary and alternative scenarios. So we expect to approach the turquoise target zone in the north, which extends from 54.88 points on the bottom to 60.30 points on the top. There, with the 5 of the same color in the white, 2 superordinate 5-part upward movements should come to an end. Accordingly, a comprehensive correction is to be expected here. So the S&P 500 made strong gains in line with our primary scenario this past week. The index was able to enter the pink target zone and work through it intensively. For the moment, however, we leave it open to the course to return to the zone again if necessary in order to expand the height of the wave a little further north. However, it's entirely possible that the story is already over. We will continue to monitor this with eagle eyes. Of course, we also keep an eye on our 40% probable alternative in the south, which would bring us even deeper lows. That's it for today. Make sure to like and subscribe.